Welcome to today's mentoring session. And as usual, I'll be starting the mentoring session with weekly sectoral analysis. And in the weekly sectoral analysis, we usually start from Nifty futures and then we go to Bank Nifty. And then in the last, I'll be sharing something very, very important about mid caps. Please pay attention and please watch the video till the last moment, because market is moving in a very, very strange manner right now, especially for people who are holding mid caps. All right. First thing is, if you remember about the video which I shared on Thursday, I had clearly told that possibility is this: after a very big move, after such a big candle which occurred on 16th of June, some sort of consolidation is possible. But the overall biasness, overall direction is still down. And the first level which could be tested in Nifty futures could be somewhere around 15,250. So we can see obviously that has been tested today itself, and next level which can be tested is still left untested. So possibly we'll see on Monday, Tuesday what happens in the abroad markets, and then we'll be able to understand possibly in a couple of days that whether the next level will be tested or not. All right. In terms of trend, if we talk in the monthly time frame chart, we can clearly see that the trend is flat as the price is moving between both of the moving averages. In weekly time frame, it has been first time, if you check properly, after many weeks, it has been first time where this particular support has been broken on weekly closing basis. This is not an intra-week move where the candle goes down and at the end of the week, again, it closes above it and makes a hammer. This is not the same thing. This is a proper close below this particular level. And this level was holding since March, which means March, April, May, June. So almost 3 to 4 months support, which is not a very small thing. It has been broken. And the next support, I believe, for market is somewhere around 15,080. And after 15,080, the next support could be somewhere around 14,770. So we'll need to understand what happens in next few days. And there was also one intraday support which I had shared with all of you in my previous Nifty short-term view video, that in case if market tries to, possibly pull back just for very, very short term or intraday, then this is that particular resistance which could provide some sort of short-term resistance to the market. And you can clearly see the levels were between 15,461 to 15,420, and exactly over there you can see market has been getting some resistance today. And I had also shared the same thing for Bank Nifty. You can see same levels, and exactly from there multiple times today between 9:30, in fact, from 9:30 to 3 p.m. entire day market kept on getting resistance for there. One candle was able to close above it, but immediately it was thrown down. So these levels have been respected pretty well by the market. And now talking in terms of medium to long term, first of all, in long term, I would say that Bank Nifty is extremely extremely close to very, very important supports. You can see over here. This is one particular line, which is a very, very important support. And the reason for that is this is a previous high, and this previous high was Jan 2020. All right. In the weekly time frame chart, you can see there has been a small breakdown. This trend line is not very, very strong, although this particular breakdown is important. And the reason for that is the daily time frame chart. If you check in the daily time frame chart, you will see this particular trend line is important. But if you check in the weekly time frame chart, this particular trend line will seem very, very small. So always when you are watching a particular chart, always try to flip flop and try to look at the higher and the lower time frame chart to understand in the context of different time frames. So if you look at the daily time frame chart, the breakdown is pretty successful. But the funny part is immediately this is the previous low. After this low, this is the next low. And then we have this particular line, which is a support, because this is a 38.20% Fibonacci retracement in the monthly time frame chart. And it is also accompanied with the previous high. So it is a extremely important support. Now, whether this particular support will be hold on to or whether this will be broken and will be heading lower, that only time will tell. Generally speaking, whenever the trend is down and prices are locked within a range, okay, because you can see this is the support and this is the resistance. Obviously, this was the previous low, and when this previous low is broken, now this will be a resistance. All right. So generally, when prices are within a range of support and resistance, markets become extremely choppy. They could become very volatile. So think twice before you initiate trades in banking stocks or even bank nifty futures. Now, in case if the supports are broken and the entire sector is taken off violently on the downside, then it's a different thing. Then we'll see continuation of momentum on the downside. What you can see over here, a clear-cut support, and multiple times you can see private banking stocks have been facing support over here. If I check in the weekly time frame chart, it will be even more clear. So yes, we have broken this particular support. This is the previous low, but again we have landed up at a decent support, and this decent support is also accompanied with the 127.20% Fibonacci extension. Now, how this is going to affect the prices, how prices are going to react, whether there is going to be a sharp bounce back, whether we are going to consolidate, I believe we will need some time to observe the price and only then decide. And we'll need to decide and see the prices very keenly, because the reason is RSI is oversold. Since RSI is oversold, this importance of the support increases a little bit more than normal conditions. So keep your eyes open on the private banking pack. Obviously, I'm not telling you to go long from here, because I'm not a person who trades bounce backs. I'm a person who initiate swing trades or trend trades. PSU banks. Now, if you check PSU bank, we can see multiple times prices have bounced back from here. But this is the first time, if I check even in the weekly time frame chart, there has been a proper breakdown in the prices. Now, this is not a good sign. This is certainly not a good sign. Now, if this momentum continues, we will be able to see some sort of selling continuing, especially if you check SBI. SBI is on the verge of breaking this support, which has been broken in terms of a new low, but it is an intra-week low, but prices have not been able to close below this. If it would have happened, then we would be heading towards the new low. So I believe if prices close below this particular support of 437, 438, then I believe we will be heading towards 426 or 425 in SBI. Metal pack. Now, if you look metal pack in the monthly time frame chart, it is looking obviously weak, hands down, and the trend is currently flat in the metal pack in the monthly time frame chart. In the weekly time frame chart, it has been a very sharp sell-off. Somewhere over here, there was some sort of hope that maybe some bounce or maybe some consolidation would occur, but I think sudden sell-off which occurred in last 2-3 weeks took away the hope of many people who were hoping for a bounce or probably at least a consolidation in the metal pack stocks. Now, there is one stock, I believe, which has not underperformed that much in comparison to other stocks. Just check the JSW Steel stock. Just check the JSW Steel stock. Now, if you check this particular stock in comparison with Tata Steel, if you compare it with Hindalco, and if you compare it with any other stock, you will clearly see that it has not been able to see such a bad sell-off, because mostly all of the stocks in metal pack have made a new low and they have broken this low. So I believe the overall trend in JSW Steel stock is still down, and if it manages to close above this particular level, which is somewhere around 567, 568, then it is okay. Probably it will not be going down further that much. But if it continues to stay below this and if it sees downside momentum, then you will see a short-term sell-off occurring in this stock also. I'm talking of a short-term sell-off. I'm not talking of a positional sell-off of 10 to 15%. Auto pack. Now, auto pack, I think we had high hopes from this particular pack, and it did delivered for a few days. It did, moved in such a way that it did not closed in that much of minus or in red territory where other sectors did, especially in the intra week, in last entire week. But in last 2 days, if you can see properly, it has underperformed, and we cannot do anything about it because the reason is at times market sell-off is so sharp and FIIs are especially dumping stocks so fast and they don't want to hold any stocks. That is the point of time. What we say is the psychology or the intensity of selling takes away all the positive points from that particular index in stocks. That is why I always repeat that in a bad market, even good stocks, even good trades go for a toss and you cannot do anything about it. If you have a look at Maruti, which I was continuously speaking about in many of my videos, I believe the levels have helped us from avoiding to enter into a trade which could have been a whipsaw, because I clearly had told that we should only enter Maruti if there is a proper green candle breakout above this particular band, above this resistance band, which has not happened. So which means we are safe basically. And one more stock which I had shared with all of you was Hero Motors. Now, Hero Motors, I had taken this with a viewpoint of a swing trade and I had clearly told that it should be closing somewhere above this particular band. You can see clearly. On 15th of June, you can see on 215, it went above this band but closed below this. And this was the high. And this was actually a resistance band. So you can see the levels in Maruti and Hero Honda have helped us to stay away from a bad trade. All right. The view was fine, but if there is no trade, if there is no breakout, then we should just wait patiently, keep on punching trades or keep on hitting the button is of no use. All right. Finance pack. Now, finance pack is, I think, one sector which you should be watching very, 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 very closely. Why I am emphasizing that much? The reason is it has now come up to a very important support. This is the high of 2020. These are couple of swing lows, not in terms of short-term lows. These are medium-term lows, even this one, and all of them are connected. So this is a very important support. And if I check in the monthly time frame chart, you can see it is even more clear now because this is the previous high of 2020. 2019, in fact, not even 2020. This is the 1st Jan 2020 starting. This is the ending of 2019. So this is a pretty decent support. What happens from here is very important. Now, if you check the stock Bajaj Finance, because two stocks which I track very, very closely is Bajaj Finance and Finserv in this particular sector. You can clearly see if I convert this chart into a line chart, we do have a lower low and we do have a higher low in RSI. So this is a clear cut PD. What is a PD? It's a positive divergence between price and RSI. And there is a sign that the downside momentum is getting weaker and weaker, and probably some pullback is possible. So I'm not saying that we should go and buy this stock right now because I don't buy lows. I don't pick bottoms. But if anyone is holding short in this particular stock, either positional or either swing, I think you should be looking at trailing your stop losses very, very aggressively. And second stock obviously will be the Bajaj Finserv. Bajaj Finserv doesn't have any positive divergence, but the candles which have been made over here, I think it would unsettle any trader, even me, if I'm holding any positional or swing shorts in this particular trade. So be very, very careful and be very, very vigilant in this particular stock. Trail your stop losses very, very aggressively. ID pack. Now, ID pack in the monthly time frame chart, it has come up to a support band, short-term support band. You can see a few candles over here. These are making decent candlestick clusters. And if I open the weekly time frame chart, it makes it even clearer. You can see in this particular zone, consistent sideways move has happened. So you can see prices have come to a decent support band and the RSI is also oversold. Now, do we have any sort of sign that the prices will reverse over here? Is it a reversal sign? No, I'm just saying that in the medium term charts, prices have hit a decent to important support band and RSI is oversold. Now let's have a look at the daily time frame chart. In the daily time frame chart, if you look, RSI is oversold and we do have a small hammer. It is a small hammer, not a very big hammer. But along with this, if I extend this small swing on the downside, we have landed up at the 127.20% Fibonacci extension, which means it is a good support in the short term. Rather than the weekly chart, I believe it is a good support for the daily chart. So it may happen that some sort of consolidation or some sort of bounce back could happen in the IT pack. Whether it will be a bounce or whether it will be a sideways move, I seriously don't know. It's anybody's wild guess, but it depends how prices will react over here. But yes, this sort of price action could happen in next few days. If this is broken properly with a daily close and continuation of downtrend continues, then obviously the lower levels will come up. Pharma pack. Pharma pack is now trading at a 38.20% Fibonacci retracement in the monthly time frame chart, and in the daily time frame chart, if you check properly, the RSI is oversold and it is trading at a 161.80% Fibonacci retracement. So this is called dual Fibonacci support. Basically, this doesn't happen every time, but whenever it does happen, it is very, very important. And probably some sort of resilience by the pharma stocks would be visible in next few days, and they would probably try to stay afloat. Staying afloat means it's not that I'm speaking of a sharp bounce back or something, but at least they will try possibly to stay higher rather than, going lower continuously, which we saw here. And this will be just a show of resilience. If anything else happens, I'll probably try to update in my next educational video about the pharma pack. Now let's have a look at the FMCG pack. If you look in the monthly time frame chart, I think the FMCG pack is still outstanding. It is, yes, this particular candle is unsettling, but this candle is yet not complete, so I will not comment on it as of now. But still, in comparison to other sectors, we should not complain anything in this sort of market. But yes, weekly chart has started deteriorating. Let's hope that it doesn't close below this candle. If it does, then some problems could occur for the FMCG pack. Again, if you see overall, prices are just going up and down. Just up, down, up, down. And one stock possibly which I feel is showing a lot of strength. It's not going higher. It is certainly not going higher, but it is trying very, very hard to stay afloat. You just check any other stock in this particular sector or any other sector, you will never see this sort of chart. This is a clear cut structure of a chart which shows that I'm a strong stock and I want to remain higher. All right. It is consolidating. It may come lower. I'm not saying that it will not come lower, but overall in the context of state of trend, because, at times we only believe about levels. Rather than levels, we should also see how does an overall chart look, or the overall feeling of a chart. So in that context, I believe it is a very much outperforming stock. Whenever the FMCG pack, the entire sector outperforms and it starts going higher, I think the first stock to check should be ITC rather than any other stock. You should open this stock first. Realty pack. Now, Realty pack is now trading at a decent support in the monthly time frame chart, but rather than the monthly time frame chart, if you look at the weekly time frame, you will have more clarity. What has happened over here is this is the first high which became, this is the first and the second high, which was a resistance, which then after surpassing, it got converted into a support. Now, once again, prices have come back at the same band, at the same level. And if you check, this is the weekly time frame chart. Let me convert this chart into the daily chart. If you convert this chart into the daily chart, we can already see once here we have seen a bounce back, and this candle is a high wave candle, which is a sign that prices are a little bit tired to go on the downside. So there are two things over here. Either there will be a bounce, all right, which we had seen over here. But over here we had a sign of a hammer. Over here we just have a high wave candle, which is not very strong but decent enough. So we'll need to wait and watch if there is a bounce back, how big that bounce back is, and if the bounce back is not big enough, if it closes below this level of 362.70 in round figure, let's say 360 in real estate sector, then again the downtrend will resume and continue on the downside. Because if you see, probably RSI is not oversold, and even the prices are not very far from the moving average. If they were very far, if the RSI was oversold, then the support would have become very, very powerful. Mid caps. Now, this is something which is unsettling. Now, if we checked every other sector, like I believe we did check metals, auto, finance, IT. If I'm not wrong, today many of the sectors were near important supports, near smaller supports, near very big supports, depending on the different sector. But this is one sector which has been able to close below the support. If you see, this is a very large trend, and this particular 23.6% Fibonacci retracement is a very, very important support due to few reasons, due to some technical analysis rules. And this has been able to keep the mid caps higher, how many months? 1, 2, 3, 4, 5. 5 to 6 months continuously mid caps were getting help from this particular support. On the 7th month, it has been broken down. Now, what will happen over here? I don't know, because this is a monthly time frame candle and this has not yet been closed. We'll only come to know at the end of the month. If you check in the weekly time frame chart, high wave, a shooting star, a small red candle, and then a big red candle. Things are not looking very good. I believe people who are holding mid-cap stocks, kindly check your portfolio immediately and do something about it. What to do? I think you people are smart enough what you need to do, but at least you need to open it once and see that you're not holding any stocks which are losers. All right. Be careful of that. If this downtrend continues, probably there is a possibility. This is not saying that this is a surety. There is a possibility that it could be a little bit faster in comparison with the large caps. If you compare, if the downtrend continues in the large cap and in the mid cap, this time might be mid caps might be hammered a little bit more in comparison to the large caps. So keep this thing in your mind. All right. So I hope this particular video has helped you to understand how markets will move in the next week. And in the intra week, possibly I'll try to update all of you through my Nifty short-term view videos. So trade less, trade wisely, and stay safe. Thank you.